Hey party people, it's Adrian. I like big banks and I cannot lie. I grew up believing that credit unions were a good thing because members of the community would come together and cooperatively own their financial institution. Instead of profits being paid to shareholders, members received financial benefits. And I've seen this play out where a credit union would offer lower than average interest rates on their loans and higher than average interest rates on their savings. However, reality is a bit messy. These are only my personal experiences, but they have been pushing me away from credit unions and towards big banks. Let's start with my first car. So I got out of school and got my big boy job, and I was driving an old car 47 miles one way to go to work. I really did not have time to save up for a good down payment. I found the car I wanted, I contacted my credit union, and their offer for a loan was $500 short. So what did I do? I got a loan from a big bank, fair price on the car, fair interest rate, and that was that. Now let's talk about technology. So banks have been developing their online banking and mobile apps. I got to a point where I was operating a business and wanted to be able to make mobile deposits for checks. My credit union did not offer that, so I went back to an account with a big bank. Now let's talk about some of this social responsibility that is involved in choosing where to bank. So credit unions are supposed to be good, right? The big banks were known to charge lots of fees for their services. However, there were big banks that were being competitive and offering online banking without fees. Anyway, I'm going to call them out. In 2017, Georgia's own credit union sent letters to all members with free checking accounts notifying them that they were going to begin charging a monthly fee. It was called the Perks Plus account with certain benefits, but you were automatically going to be charged a fee unless you opted out, which I did. So this really ticked me off. If your community's credit union is going to be just as greedy as, say, Bank of America, who was known for their monthly fees and fees for visiting a teller and stuff like that some time ago, I don't know about today, then what's the point of a credit union? Now let's talk about modern times and the historic high interest rates. So you can keep your money in a savings account, which is a demand deposit account where you can take your money out whenever you want to. You also have time deposit accounts or certificates of deposit where you commit your savings for a certain amount of time and the bank or credit union commits to paying a certain interest rate. Now generally, CD rates have been higher than savings account rates, but in recent times, a lot of the big banks have been offering high yield savings accounts. So you have a high competitive rate on a regular savings account. I like to have my paycheck coming to a checking account where I can just transfer money over to the savings account. If the credit union doesn't offer a good interest rate on their savings account, then where's my money going to be? It's going to be with a big bank. However, still wanting to do business with a more local institution, I decided to open a CD with my credit union. So you could do it online, and the forms were like PDF forms. They were a little bit complicated. But also, they wanted to check my credit report in order to verify my identity. Now, I'd been a member for over 20 years, but they want to check my credit report. But wait a minute, I'm loaning you money essentially, and you want to check my credit report. Anyway, I opened the account. So a year later, at the end of the term, I want to withdraw the money because I don't want it to renew at the lower interest rate, which was no longer competitive for a one-year CD. The way to withdraw the money? Call them on the telephone. And it was after a holiday, the phone was busy, I called the next day, I still had to wait on hold, and then I did the callback option. Finally got to tell a human that I wanted to withdraw my money. Well, the next time I wanted a CD, I checked out that option with a big bank when they had a really good interest rate. So I used my mobile app to much more simply open the CD account and transfer the money into it. And guess what? I can use the mobile app to withdraw it early or withdraw it after maturity. Okay, so I'm still curious whether any credit unions offer a good rate, and I found something called a Kasasa checking account. What is a Kasasa account? So if you look at the features, you have certain terms to meet, and if you meet those terms, you get paid a very high interest rate on your checking account. Sounds interesting. That would be more convenient than having the separate savings account. So the main feature of those conditions that you have to meet is a certain number of debit card transactions each month. So let's say it's 12 transactions per month. So this looks like a game. Your checking account has now been gamified. And so I have no use for this, even though it's interesting. So why do they do this? Apparently it's to let credit unions or community banks have more profitable accounts when they do something like this. So if you're making debit card transactions, there's a transaction fee through Visa or MasterCard, and it does not count if it's an ATM transaction with a PIN code that you might use at the grocery store. And this game has winners and losers. So if you have a lot of money in your account and your transaction volume is low and you get a good interest rate, then you're the winner. However, if your balance is lower and your transaction volume is higher, now your credit union will be keeping those transaction fees. I have no need for this game. You can use a credit card from a big bank and get rewards like 2% paid back to you very simply. And then you can have your money in a high yield savings account in a big bank and get the good interest rate. I'm still wondering, what the heck is Kasasa? And so I don't have any insider views on why institutions are using it. But Kasasa has a website and they are a fintech, a financial technology company. So apparently, I'm just guessing here, the small institutions don't have the technology to play this game. They can type in interest rates, but maybe they have a hard time counting qualifying transactions and all these other particular conditions that are part of the game. So if they partner with Kasasa, they can do that. Why don't they just type in a different number for that interest rate? That would be a lot simpler. That's what the big banks are doing. The only reason I keep that credit union membership is I have a very interesting credit card with a very low interest rate compared to other credit cards. So it's a good option to have if I need to make a big purchase that I can't pay off right away, then I will be using that credit card. But that's about it. Thanks for watching. Have a good one.